Hey Dividend investors, today I'm going to be comparing AT&T and Verizon against each other. Which one's going to be a better investment, but also the reasons of why I may or may not be interested in purchasing one or both of these stocks. Let's get down to it. So both of these are communication stocks. So basically, they're going to be a big play when it comes to the cell phone infrastructure and the Internet of Things. More and more things are going to be connected to the Internet. Cars, obviously cell phones already are, and many, many more things as well. So from there, which one's going to be a better future investment? Let's get down and let's compare the two. So first we are looking at Verizon, and at the time of recording this video, we see that it was up 58 cents today, which was about 1%, and 17 cents after market. From there, the market cap of Verizon is $236 billion. I'm going to round up just a bit there. And from there, we see that the forward-looking dividend is 4.4%, which is quite high for an American stock. We generally see anything above 4% being a little bit more dangerous to operate or hold. And from there, the ex-dividend has already passed for the previous dividend, so you're going to have to wait a little bit of time to be able to get your dividend once you purchase it. Something I do look at occasionally when I look at dividend stocks, especially a blue chip stock like Verizon and AT&T, is the PE ratio. Generally, once it hits around 15, I start shying away myself. When it gets closer to 10 or under, I start really becoming interested. The volume is quite high. You're looking at millions and millions of shares, generally 18 million shares on average per day, and the 52-week trading range is between $48 and $62 a share. And considering that we're currently sitting at 57, we are about $5 off from the 52-week high. So if it was to test the 52-week high again, you would see roughly about a 8 to 9% increase when it comes to the share price. So you could do this as a quick trade potentially. When we look at AT&T, the forward-looking dividend is very high. You're looking at 7%. That is huge. You're also looking at a stock that is $30 a share or $29 a share, and it was down today while Verizon was not down today. From there, we look at the volume, and the volume is quite high. You're looking at 40 plus million shares being traded every single day. So both of these stocks are pretty liquid. We want to look at the PE ratio, and there really isn't one. It's not doing so well in the earnings category. The ex-dividend date is also in the past, so you will be looking to hold the stock for a bit of time before, of course, you get your dividend. From there, we want to look at the 52-week high, and the 52-week high is about $9 off from the $9 off from the price that it's at right now. And when we look at the 5-year chart, it seems to have bounced off of roughly 52.50 or roughly 52 quite well. And of course, from then it's really tested around $60-ish twice over the last couple of years. And it's currently trading, I would say, within a range of about $55 to around $62. So could it have a breakout? We don't know, obviously, but there are some interesting stories coming out soon. We do want to look at the financials, and of course, it didn't do all that bad during 2020, which is interesting because, of course, there was a worldwide recession due to the COVID pandemic. It has also beat all 4 earnings out of the last 4, which is fantastic. This is what you really want to see in a company. We obviously don't know what's happening here just as of yet, but it is coming soon. April 21st is that day. And that is some time off. As we know, the COVID pandemic has been pushing a lot of people back home to work from home. Will this continue? Because obviously when that happens, Verizon is going to be doing really well because there's more people at home, which means that more people need internet at home. And a lot of people will need to use the cellular lines to be able to get internet at home. Now, from there, we're also looking at the fact that now there's people going back to work. Does this mean that some of those contracts may end? There is a possibility of that. There's always that risk. Now, as we can see with AT&T, they did not have a good 2020. They have negative earnings. Now, this could mean one of a couple of things. So this could mean that this could be a fantastic time to buy because, of course, this may have been only a one-time, one-year thing because of COVID. But I'm thinking that there's more issues than just that when there is Verizon and many other telecommunications companies who are doing quite well. We can see out of the last 4 earnings that they've had one massive beat, one pretty good beat, one in line, and one loss. So from there, we can see that considering there was a 1-cent loss in Q1, we can assume that there could be a loss again in Q1 of 2021, which means that the stock price may go down. Has a good possibility of that happening. Now, out of the two, which one would I pick? I would probably be picking and siding with Verizon. They have good earnings. They're not in the negatives. They have in the middle of the road PE ratio. They're not at 15, which is what I stay away from. And they're not at 10, which is where I would be buying in like there's no tomorrow. However, there are a lot of things happening in the future that are quite interesting. So, of course, there is the Internet of Things. There's going to be more electric cars. There's going to be more of an interconnected grid when it comes to the city, when it comes to their like what's it called, the traffic lights. They're all going to be more and more interconnected. They're going to be watching to see the traffic. There's a lot of this new technology coming out where they can see where the traffic is, and they can really set up the lights so that there's less people driving on the road, idling at red lights, things like that. And there's a lot of that kind of technology coming out. And of course, when that happens, they're going to be using companies like Verizon and AT&T to be able to handle that kind of an internet traffic load. However, there is also that risk of SpaceX being able to really, really do well in that internet space. Because as we know, Starlink is coming out. More and more people are going to be able to use Starlink, which is going to be cutting into a lot of the profits and a lot of the usage, a lot of the customers of these historic companies like AT&T, Verizon, and all of the others. And because of this, I personally, if it came to a point where I wanted to invest, I would not be looking at it as a 5 to 10 year hold. I would be looking at it as a 1 or 2 year play, and then reevaluating within a year or two to see if it's still a valuable or viable company for me to hold. I really do believe in SpaceX and their Starlink system, if you haven't seen my previous videos about it. So that is a factor that may come into play into the future. I hope that you have enjoyed today's video. Of course, never listen to a random guy on the internet, and I'll see you guys again in our next video.